Farm4Profit podcast. Take a listen, have a blast. Farm4Profit podcast. Learn about farming while having a laugh. Farm4Profit podcast.
Hey, listeners, welcome back to the Farm4Profit podcast. This is Tanner.
This is David.
This is Corey.
And Rachel's standing behind the camera laughing at us.
Really close. We're standing.
This is the closest Rachel's ever been.
We're standing,
To
and we're
our
on the
stand.
road.
I feel like we are like announcing a sports game.
Oh, this kind of gives a little bit of that feel.
Yeah.
All we're missing is our suit and ties, right? Farm broadcast.
Hell yeah.
From Husker Harvest Days, sitting here doing our very first interview on an overcasty, misty, muggy, cool morning.
Moist.
Damp.
Stamp.
Listeners, no matter where we are, we always appreciate you. Thanks for tuning in, especially during this harvest season of yours. If you've got ideas or you're going through the field and you're like, I wonder if they will do an episode on this, shoot us a text, 515-207-9640, or send us an email, farm4profitllc@gmail.com. We love to hear from you, and we know the topic we're going to discuss today is extremely important, as always, but in the grand scheme of things, guys, this is a year maybe where it's even more important.
It's always important, but we definitely feel it more in the down years, as you said this morning.
Yeah.
Well, is it more talked about? It's like the opposite of social media. People only post the good stuff on social media. Nobody says, I lost $10,000 on social media.
Right.
They say, oh, I bought a new truck. You only hear the positives. You never hear the negatives. But when it comes to agriculture, when times are bad, we hear it more than maybe when it's good. Nobody says, hey, I got $7 corn, bought a new combine.
And to some farmers, because our target for this conversation is how can we navigate tighter margins? And Corey says it a lot, that we grow commodities, and we feel like commodities means that we always deal with tighter margins.
Yeah, we don't feel like it. It's just true. A commodity is meant to be, traded, and people want it to buy it at the cheapest point possible.
Yeah. So is this just the future? Is the future now?
No,
and now we're in the future?
Markets ebb and flow,
Okay.
but what the future is the technology that's changing, how you manage it, and the game has changed. The future of commodities is going to be up and down. In my mind.
Yeah. Well, our guest today is back by popular demand. About this time last year, it was at Husker Harvest Days last year.
Yep.
We had the pleasure of meeting Grant Wiese with Farm640. We'll let him give his background here in a little bit, but you as listeners were very appreciative of the conversation we had. And I hope we have another straightforward conversation that provides you value, especially going into the planning process for next year, to be able to dive into things. So welcome back to the podcast.
Yeah, appreciate it. Thank you very much. Happy to be here.
Nothing like making you sit and wait for a very long introduction before you actually get to talk the first time.
That's fine by me. We're just burning
He's
up time
standing,
here.
not sitting.
That's true.
And we make you stand. Yes.
Meet Maya corn heads, built better for over 40 years to power through down corn, high yields, and tough fields without flinching.
These durable, low-maintenance heads mean less downtime, less grain loss, and more profit per acre. They have the option for down corn attachments or direct-driven chopping. They ensure that your combine will move smoothly, fast, and full at all times.
Don't just harvest your fields, conquer them. Visit mayacornheads.com to find the dealer near you.
Excited to have you here. For the listeners that didn't catch your show last year, which we will make sure to tag in our show notes, tell us a little bit about who you are.
So my name is Grant Wiese, and I am an egg lender by trade, but also do a little bit of farming on the side. And in trying to keep my lending customers up to speed with what was going on the lending side of things, margins in general, started to send some emails out to individuals, which turned into a website and a weekly newsletter. And now I've got 5,000 followers on my weekly newsletter, detailing out how operations can be profitable, take steps towards land ownership, and trying to keep the family farm in the family farm. So that's really what I'm looking to do on a weekly basis.
Yeah, keep the family farm in the family farm.
Corey, let's go to your you sent me a TikTok or something the other day.
I sent a lot, so now I'm going
to. It was all basically talking about how we're not going to make it in farming next year. Do you remember that one?
Oh, I don't. Do you
There
remember who it
was a whole reel, and in the reel, basically, they were interviewing people at a farm show, and they said, I'm not going to be able to make it. I'm not going to be able to have a seventh generation.
Yeah, I
I'm
remember
not
some negative. Yeah, a lot of negativity, yeah.
You just like to send that stuff to me. Like say, it's not going to be good.
I
land
see
prices.
stuff that's just, relevant, and you watched it.
We send stuff like that
I
to
know you watch
Dave,
long stuff.
So you'd stop telling landowners their land's worth more.
Yeah, a lot of chatter out there, but there's old money. there's old money. So is it just the demographics changing, Grant, or is it that we just find ways around it?
There's definitely possibilities to keep everyone in the operation for the upcoming year. And Corey already said it. It comes down to management. That was one of the first words out of his mouth here in this podcast. It's how do you manage it? How do you find ways to? I mean, everyone's trying to find ways to cut margins and improve profits, but what other steps can you take? Because everyone's doing that and it's not working. Break-evens are at a very high level. Margins are so tight for operations here. And so what are you doing from a marketing standpoint? What are you doing from a generating additional income? Using the resources available to you to really take your operation to another level. It's not just about cutting expenses. We can only do that so far here. And frankly, so many operations still can't make it work this year, even if they had the lowest input prices possible. Inflation is real. It's hit agriculture. And so what else can we do to improve the margins on the operation? You can cut expenses to zero. You can only cut expenses so far, and you have nothing from an input standpoint. But income potential is limitless. And so you can always take the income and skyrocket towards the roof, but you can only bring back expenses so far.
At this time, it feels different, and I don't know that it is. When we are in a bull market and we go up, we bought our inputs lower, and it feels great.
Yeah.
We might get a year, maybe a little bit more, of good times. But then the margins or the inputs follow us up, right?
Yeah.
Tighten the margins, and so margins are tighter $7, right? It's easier to make money there, but it gets hard there too. But when we come back down, it feels like fertilizer has only gone up, even though the corn and soybeans have gone down.
Yeah.
So I don't know if that's normal or if that's the inflation that we're starting to see and the tariffs and all that, everything over.
It's all of the above.
Yeah.
Because we saw this in 13, 14, 15 as the inputs kept creeping higher and higher. And I think the big one that was talked about then was seed. Seed's never going to come down. And
Right.
it's squeezing guys. It's squeezing guys too much. And that's what we're dealing with now is we might have saw, let's say in 13 through 18. So that's a 5-year span. We might have saw working capital loss of maybe $400 an acre over that 5-year span. Some guys are just getting $300 to $400 working capital loss per year. Right now. And so you're nailing it. It's the inputs I've adjusted to the profits that were out there, and we have inflation. It's a double whammy on us, and it makes it really hard. It makes margins really tight, and it makes people skeptical as to whether or not they can keep going.
So are the headlines true?
Which headlines?
Record level bankruptcies.
Oh, we're not there yet.
So why are they reporting on that? Is it gonna get that play or get that far to where we are gonna see record level bankruptcies in agriculture?
I don't believe so. I'm bullish agriculture, even still here today. I believe that there are options and opportunities out there for individuals to manage the farm at a profitable level and grow into not bankruptcies, but grow into just natural retirement of farmers who are exiting the industry. I think there's going to be good potential there for those who can manage the operation correctly, find a reliable labor source, and then scale into just retirements. There's going to be plenty of opportunities.
You got to realize to hit record, you'd have to go back probably to the 80s.
That's fair.
I was listening to a book that said this was a North Dakota book, but like 80+% of the loans were being defaulted on at one point.
Yeah, and last year was the first year we had seen bankruptcies even up from a trend standpoint. We had kind of bottomed out, and we had good years and record profits. Good year in 11, record profits. Good year in 21, record profits in 22. And then 23 was just a carryover. 24 was the first year we saw.
I feel like bankruptcy doesn't happen overnight. So when you say bankruptcies are up, that tells me that for the last 5 years, people have been trying to figure out the problem, couldn't figure it out, and then it came to a head. How long does it take for a bankruptcy to happen? It's not, if we have bad corn this year or bad profit, is it next year we're bankrupt?
No, and we came off of those record profits in 22, and so that takes a long time to unwind. Now the problem is operations that had record profits in 22, and then their CPA said, "Oh, you're going to have to pay $500,000 of income tax if you don't fix this problem here today." And so if let's say you had $1 million of income in 22, and then you spent $1 million of income to avoid your tax problem.
Yeah.
Well, that can speed things up a little bit, but it takes a long time for that to unwind.
So what would be a good metric to know if that's starting? If it takes several years for bankruptcies to come
Yeah,
to fruition.
like how do you get the feeling? I've had guys tell me that they think next year is going to be tough, so they're going to sell some equipment, but they're not going bankrupt.
Well, go ahead.
Nope. Let's go right ahead. And answer
I was-
Corey's-
I was-
wanted you to answer Corey's question.
Well, I would say, as an operator, let's not focus on that. Let's focus on our own internal operation, our numbers. It doesn't matter if neighbors or someone a county away or a state away is going bankrupt. Let's just focus on our numbers and how we can fix our personal operation. I'm not too worried about the grand scheme of things. I'd be more worried about bankruptcies if we see wholesale farms all over the place just selling, and then we see land prices tank. I mean, there's still a lot of equity on these balance sheets. Balance sheets have great equity with the land. It's just whether or not we can improve the margins on our cash flow and keep our working capital in a liquid position. So I think there's a long runway for a lot of operations still.
Dave and I had a conversation in the pickup. Well, we were all in the pickup, but Dave and I were talking back and forth about what we felt was more important. And he challenged me, rightfully so, as to, we always say working capital is king, cash is king.
Yeah.
And he said he thinks equity is king.
I think that if you have enough equity in the land, the lender will give you the money because they're positioned. They're in a position, well, if you got to sell it, we'll sell it, and they'll keep loaning the money to get you the cash. What's your opinion?
I'm going to partner here with cash is king because I think that if you are illiquid so far to where you can't pay for your inputs, it doesn't matter how much equity you have, you can still go to the sale. But if you always have cash, you can always operate the next year.
And if you have the equity, that's fine. Most financial institutions are still going to want you to prove cash flow for repayment. So even though you have the equity and the assets, if you don't make enough money to pay back the loan, you're not going to get approved.
You're just digging yourself a bigger hole.
That's where you as an auctioneer come in, to where you need to liquidate that asset that has the equity position to gain cash.
I feel like I see people just hop lenders at that point. So, like, you want to know what your metric is? When that lender turns you down and you start shopping for 2 or 3 more to get your cash back up to leverage your equity, that's the first sign, I think, that you're probably on the wrong side of go.
Did you guys see that in the banking world? Hopping?
There's always another lender. The scary part is once you start to hop, you see that interest rate creep from 7 to 8 to 10 to 12 to 15 on who that next lender is, because you're always going to the next slightly more risky lender. You're in a worse position, so they just jack your rate up and you lose options. You can't make it work at 12% interest on operating.
I like Corey's question. Do you have any other indicators? Like, let's give a take home here. What's a takeaway that we could say, are we getting in a bad position or not?
If we know our numbers, what's your advice as to something we should pay attention to?
So I'm going to start with that question first, and I would just check profitability reports through universities as far as which direction we're heading. I think the University of Illinois came out with something here a month or 2 ago that was showing that it looks like 2025 for a corn grower in the state of Illinois is going to have $150 working capital per loss acre. So just keep an eye on those indicators. They're obviously not going to lead directly towards bankruptcies, but we can get a pretty good feel of how ag in general is doing and how they're feeling. And I mean, frankly, we're talking real crop here, and that's my area of expertise. Cattle guys are doing great. Yeah. There's some ways to offset this with diversification and some positivity out there. And if you are diversified in the livestock sectors, in particular cattle, you're feeling pretty good about where you're at right now.
It's not as easy. It's easy to say, but it's hard to do. Like, I've actually thought about it. I want to diversify. I think growing cattle would be fun. I loved it growing up, but all the fences are gone, all the barns are tore down, and a lot of row crop country, a lot of people went away from that.
Yeah.
So, like, now cattle are at the highest they've ever been. Where do we even get into it? Like, that's the hard part.
Well, and you don't have to buy into the cattle to get into the cattle industry. So let's say another feedlot or someone else is expanding. You have a tractor that sits there for 9 months out of the year. Let's say 11 months out of the year, because there's a lot of farmers out there that have a planter tractor, and it stays hooked up to that planter all year round. Why can't we get some value out of that tractor the other 11 months out of the year? Get a spreader, start hauling manure for that feedlot, and create some value, some additional work for your guys that you're trying to keep on hand. You're paying for the labor.
Yeah.
They're not working full time at certain times throughout the year. So let's find ways to get into the cattle industry and generate more income with the resources we have available.
Yeah, now hours are expensive on equipment, so you need to make sure that whatever you're getting paid is justified as well.
I think you could go even further on, like, if you have cattle, you could start diversifying your crops. Like, okay, maybe they want rye, cut rye for it, like your family does, Tanner, or something like that. That's been one of my biggest gripes of cover crop is, like, I don't want to have to go kill it. I want to cut it and use it
Yeah.
to feed, right? I'm growing something, I want to use it. And so getting more diversification, more people into livestock could open some more doors that way.
I think you got a good point there as to how we can put this together. But I know since we're having a financially focused episode, we talked about working capital, and you kind of talked about how potentially farmers are in Illinois, for example, based upon that one report, are showing $150 an acre working capital loss. What is working capital?
Working capital is your liquidity. So it's current assets minus current liabilities. And if we want to go just dig one step deeper into that, current assets are anything that you can turn into cash quickly. So it's typically going to be your grain in the bin. It's accounts receivable within the next 90 days. It's obviously your cash checking savings account. Liquidity, and it would be livestock up for sale. So your calves, if you're planning on selling them. What liquidity is, what working capital is not, is your machinery, equipment, vehicles, real estate, that type of thing. So it's
But
the
Dave-
assets coming up due.
Dave could turn that to cash in the next 6 months.
Yeah.
Is it on Big Iron? Is it on? I don't know who you guys.
Whoa.
Wrong name.
No
there.
free
I should have asked for the
Whitaker Marketing
sponsorship
Group,
first.
DPA. No.
Yeah,
Very similar. But yes.
Is it listed up for auction?
Right, correct. Not at this point in time, but we know we could liquidate. I just remember
could do
that
it in 2
being
weeks.
a very frequent question
Yep.
as far as that goes. But that's another thing to consider. If you are curious and serious about your financials, which you listen to us, so you probably have a little bit of a care, first thing we're talking about is working capital. What's your cash on hand? What's your ability to convert assets to cash in the next 6 months to cover the bills that are due
Yes.
over that same time period? So what else is important to pay attention to?
So selling equipment is manufacturing that liquidity. It's manufacturing working capital. And so you can only do it so many times. So the sale of assets to prop up your liquidity position, your working capital position, you only have so many of those assets to sell. And then you're out of business. And so you want to make sure that you are producing enough calves, commodity, out there in order to pay your bills.
So it's a desperation move, unless you just have too much equipment
Yeah.
because you couldn't sell it. Maybe that's a good move.
Exactly.
You're like, hey, I don't
Well,
need that extra.
yeah, if you have 3 combines, you only need 1.
Right,
You
yeah.
know, some guys might have bought in the good times, and I mean, I've bought extra equipment. I think in the past that I think if
Yeah.
times ever got tough, I'll sell
Well,
that, and I know I got.
Yeah, like my dad, he'll go to trade a tractor and then I want to keep that trade, or something like that.
Yeah.
Right?
We've also talked about sale leasebacks when it comes to ground.
Yep. A lot of that.
Explain to what that is.
Yeah, so on ground, I have people call me all the time. Of course, it's a pride issue. This whole deal is a pride issue. I don't want to go to the bank and say that I can't afford it. I don't want to say that I made bad decisions. So how about we find an investor to buy that ground? I get to farm it. And so now I freed up some liquidity. I have $1 million cash in my hand, and I'm going to make a new go at it, but I'm going to rent the ground, but I freed up that capital.
What do you think about sale leasebacks?
It's hard to find someone to agree to do that from an investor standpoint, and they are out
The
there.
rates that are attractive,
Yeah.
like
Correct.
rental rates.
Yep, because the investor typically is looking at return on investment, and so they are wanting a 3, 4, 5% return on investment, and they would have to put a lot of cash down into that purchase to get that type of ROI, and would have to charge a pretty high rent,
Really high rent. Yeah.
really high rent in order to make that work. So you have to find absolutely the right partner who's willing to work with you and do that type of deal.
I would argue that it's again I'm not gonna call it desperation, but it's a move that I better have a plan going forward because we talked about equity position, right? If you own all your ground free and clear right now, markets suck, but you got a little bit more padding. This is going to kick you into that. Now I just have cash. I don't have the equity, and so down the road, is that going to cause a problem?
Yeah.
It's an interesting play, right? Because it still doesn't fix the root of any issue. If you don't know your numbers, if you don't understand what your break even is, if you don't understand what your leverage position is, you can make rash decisions without having any idea, especially what the repercussions are.
Yeah, absolutely.
So what have you been seeing over the last 6 to 12 months since we had a conversation is it this bad? Are we being too doom and gloom right now as to why we think it's important to talk about these key ratios, or is it still important?
It's still very important, but I'm also not doom and gloom in this situation either, because I know plenty of young producers who could grow 300 acres this next year. They put a projected cash flow together for 2025, and they say, oh, it's break even. We might lose a little bit of money here, but it's going to be a tough year. And I know they're going to come out ahead because they know a break even by field. They've put a floor in place on their marketing plan. They're active in their decision making on the farm, and they're paying attention to those numbers on a weekly basis and updating everything. And their fixed costs, their rental agreements, everything that they do is very well thought out for the long-term trajectory of the operation. So I know that there's plenty of producers out there, young producers out there, who have the ability to grow because they are managing the operation very, very well.
Of your young producers, how many of them have side jobs?
Define side job.
Off-farm income.
Like you're a lender, but you farm.
Yeah.
So let's
I
call
didn't
it
say
part-time
on-farm jobs. Maybe they sell seed. Maybe they truck. That,
yeah,
it's like an
I'm a
adjacent
realtor,
industry.
but I farm part-time. You know.
Yeah.
Podcast host, but farm part-time. You know, I mean, I see everybody.
How many of them have 2 full-time jobs?
I'm thinking through that, and I would say over 75%.
Yeah.
So either they're selling seed, they're running a harvest crew, they're doing custom work. The wife works off the farm.
I was gonna say, do you consider
full-time.
wife just even if you farm full time, but the wife is?
Well,
has an
well,
income
let's
of
think about that. So if you have a spouse that makes, let's say, $50,000 a year, and then they're watching kids on the side as well, but we're also getting health insurance. I mean, what is health insurance going to save you?
$1,400.
$30,000? What is it?
Yeah, $20,000 a year is about what I pay.
So that's $70,000 right there, real quick. You go pick up how many farms are you gonna have to farm to make $70,000 this year? Well, that number's infinity right now because
If it's a
margins are
negative margin.
tight.
Right.
But that goes a long ways. And so I'd say, yeah, over 75% of those producers who can make it pencil this year are doing something in addition to their row crop farming to help alleviate the seed expense, the equipment payments that are due. They're doing something to ease that expense and generate enough income to cover one area of their operation.
I think there's your answer. We get asked all the time, how do I get into farming? I'm a young guy. How do I get into farming? How do I get into farming? I think we just answered it. And the answer is work your ass off. Flat out. You might have to have 2 jobs. You might have to marry somebody that has more work. It's work is what I heard. I heard job over there, job on the side, job on the side. You have a job on the side. Everybody's got something.
It's work to catch the attention of that young girl that's got her name in the plat book, too. It's just a job one way or the other.
And there's a lot of ways to do it. I mean, that's always been the farmer's mentality, right? I'm
Yep.
going to outwork the neighbor.
Correct.
I'm going to get up at 4 a.m. I'm going to go do hog chores. I'm going to do this. I'm going to do all the extra stuff. But now that you just have technology at your fingertips, that maybe it's not labor intensive. You have access to the world through the computer in your pocket.
And I don't want to make hard work sound negative. I think that's
No.
a positive thing. That's something that the Midwest and Central America prides itself on, is the ability to work hard, get a little bit dirty, and do a great job. And Corey, to your point, the technology helps to relieve some of that strain of working long hours. You're not standing there. I remember disking and field cultivating as a kid. I was never allowed to cultivate when the corn was up because I was going to just take out swaths of it because I couldn't drive in a straight line, but I had to know how to drive in a straight line when I was a kid. And we don't have to do that anymore.
Right.
It's, you can check other things, you can do your marketing, you can be taking phone calls while your tractor's going in a straight line. And some of that does definitely ease the stress of the job.
So last time we chatted, we were introduced to your toolbox.
Yeah.
Explain again to the listeners what that toolbox is and how your clients are using that to understand where they're at financially.
So last year, I was just ready to unveil the Farm Buy-In Toolbox. And so that was basically giving producers all of the resources that they need to go buy ground. So it was understanding what the bank's looking for, understanding your balance sheet position, running scenarios on the purchase to see how this would impact you, both from a cash flow, working capital, debt repayment standpoint. I had a 30-day auction template to look through. So if you're going to prepare to buy ground on auction, you should be taking these steps to prepare for the ground. And that was great. That was a huge success. I had 43 individuals hop on board with me and go through that program. A lot of young individuals who were just super stoked, saying, hey, plan on coming back to the operation in the year or two. I'm in college, but this is going to be great for me to just learn and get steps years ahead of other producers who maybe have been farming for 5-10 years and haven't even bought ground before, which is perfectly fine, but they felt like they had a leg up on other producers because I spell out how to go about this process of getting yourself in position financially. And so that was a great success. Going through the spring, I met with so many of these producers who were putting their cash flows together that were going to be tight and struggling, and they were just, weren't really excited about this upcoming year, and definitely weren't in the market to buy farm ground. So I did make a pivot, and I made a new product this past spring to help fill the need of the producer, because so many guys aren't even close to thinking about buying ground right now. Their focus is just surviving to next year. How do I make this thing profitable? So I built Cash Flow Plus, which was a little bit of a pivot, but a second product out here for the producers. And what that looks like, I broke it down basically into 5 sections as Cash Flow Plus. So first, I created 3 separate spreadsheets for producers to use, because depending on how your operation is structured, a lot of cattle guys like a monthly cash flow. So that works for them. It helps them to manage funds as they're buying cattle, moving cattle in and out. I created an annual cash flow, which is my personal preference. I can compare my projected expenses and income for the year compared to my actuals. And then I created a break-even cash flow, so you can break it down on a per field basis. So made those for producers. That was section 1. Section 2, we brought in Shay Falk with AgView Solutions and talked about expenses. How can we shortcut some of these expenses? What are some tricks of the trade to get the lowest expense, the lowest input pricing possible? And that was so fun to sit down with Shay and talk through that, because I learned a ton. I learned so much that was valuable for my operation, but he just kept having nugget after tip of how we can really carve these input expenses out. So that was the second section. Third, we grabbed Angie Setzer, the Goddess of Grain, with marketing on putting floors in place for your operation and making sure that we can do a decent job from a marketing standpoint, so we're not sabotaging ourselves by putting our head in the sand and not taking action. Fourth section was Clint Fisher. We talked about generating additional income, so it's all about the diversification. It's the finding more income and ways to use your assets and your labor source to generate more income. And then I covered the last section on debt structure, so just making sure that you don't have improper debt structure within your current operation that would sabotage your cash flow. So put those 5 things together in a package and working to help producers generate more income. And maybe we'll hit it here at the end, but I'm going to have a special giveaway here once this episode comes out.
What a home run.
Yeah.
Those are all friends of the podcast.
Yeah.
All extremely smart people.
Sounds like a grand slam.
That's fair.
So it's a grand slam for the guys that maybe are getting tougher, tighter margins. What about the guys that have money? What about the guys that were paid off back in the 80s? They stored away a lot of grain when it was $7 corn, bought all brand new equipment. They're free and clear, got a pontoon. Go down to Mexico.
Is that your metric of success? They got a
they got a
most farmers
pontoon is it?
So all summer they're hiring somebody else to spray for them, and they're on the pontoon. What about those guys? What is their position right now as we look at? Do they need to be super bullish and be buying everything while the markets are down?
This tool, I think anybody can use.
Yeah, they can definitely use that as well. They might have less of an interest. They might be more of your buy and lease back investor type of person that you should be pursuing. Not everyone knows who those individuals are, but I guess
look for the ones with pontoons.
That's not always the right path. Sometimes the pontoon owners are in a good spot, and sometimes they're broke. Yep. So we just never know. So I would never I wouldn't go
use that as
so
a metric.
Far. Yeah, that's maybe not the best metric in the world, but pontoons are fun.
But if they are, should they be pulling it out of not pulling it out of farmland, taking profits from farmland, buying more? Should they be investing in Casey's or stock somewhere? Or what's your advice for the guys that have money?
I love agriculture and I love ag real estate. And while there might be options out there for better ROI in the short term from a cash standpoint, I'm a huge believer in the ag real estate. Yep.
I don't think it's bad to be somewhat diversified though, in other investments.
Bitcoin.
Right. You're talking retirement and all that. It's just like farming, right? We want more diversification. I think it's okay to dabble, and then you have a better knowledge of how things work.
I think
outside
so too.
of ag as well.
Well, we even had our episode on how do you actually retire. Well, sometimes being diversified and in having an IRA or having stocks, with dividends and so on and so forth could diversify your retirement funding to where you can provide that next generation an opportunity and not have to rely on gouging them or having such a high cash rental rate just to take care of your retirement lifestyle.
Yeah, and I've talked to producers as well who they're continuously learning and growing and learning about investing, and so they're going and finding properties that aren't necessarily ag, but they are real estate, and investing in those opportunities, watching them skyrocket in value, and then eventually 1031ing them into a quarter of ground, 2 quarters of ground in the future. But that diversification helps them learn and grow and adds a few tools to their tool chest as far as an investor standpoint, and the diversification is good as well.
Harvest season is here, and so is your competitive advantage.
That's right. The Estes XPR3 concaves are a total game changer. Think one concave, all crops, no bands, no switching. From wheat to corn, soybeans, you're rolling non-stop. Backed by their patented technology with 250% more threshing surface, you get cleaner grain, fewer fines, and beast-level capacity, all without trading combines.
If you're interested, visit EstesPerformanceConcaves.com to upgrade your combine today. Estes XPR3, harvest smarter, faster, and better.
So we've talked a little bit about why we, now the entire podcast thinks working capital is king. Understanding how we can convert equity into cash if we need to, and we've identified that as a short-term fix. Mm-hmm. Knowing our break-evens is extremely important. What are the top 10% of your customers doing now as they start planning for 26?
Probably forward contracting.
Yeah, there is some decent numbers still.
Yeah,
right,
you can,
in the futures.
You can catch a D's 26 corn at 460 in a lot of places on the board. So there's opportunities out there to be looking ahead. It doesn't seem like fertilizers maybe we're in the best point in time to buy that. I know it's really expensive right now, but they absolutely have a plan and are thinking about how they can make 2026 profitable before we have the 2025 crop out.
Have they already started talking to you about 2026?
Not so much, but they're thinking about it.
I feel like I've heard of more people really getting back into the management side. For a long time, we could just go spread all of our fertilizer out there. And I've heard more people talk about strip till and going and side dressing and all that kind of, so you could cut your fertilizer costs down by managing more because you're putting it on right when it needs it, or putting it in a band, or cutting your fuel by not just tilling everything. So I've heard more people talk about that kind of stuff this year because of these margins.
Well, and let's think about how the margins are so bad and the inputs are so high. The last 2 years, it really hasn't seemed like it has paid to pursue top yield because the inputs are so high that getting that last bushel squeeze out of the crop necessarily might not be the best financial decision, even though you're trained and used to going and pursuing those yield contests that are out there and trying to get 300 bushel per acre and going after it. It hasn't penciled very well recently. And so,
but those are important because you can pull nuggets out of management tips.
Definitely.
Right?
Yeah.
So we're going to have a conversation later today on that and probably ask the same question because I'm right with you. Like I've gone on my farm from trying to get that top tier to, you know what, I just want that hybrid that is going to be good in a drought, good in a flood, and produce consistently over average.
Well, and when I think about the fields that I have, it's dryland corn in Nebraska. And
what do you mean dry land corn? We flew over yesterday and there's no dry corners. It's all green.
There's no pivot.
It looks like just square fields almost.
Yeah, we've been very fortunate this year. We planted into a drought where it was looking really rough and then just got constant rain for basically 3 months here.
Plant in the dust, the bins will bust.
Yeah.
Not the Sukkot bins.
Not soon.
They'll hold it.
No, they'll hold it up. Yeah.
It'll just overflow the top.
It was really frustrating for me because when I started farming, I would talk to my dad like, Dad, why aren't we putting more nitrogen down? Like, this corn can produce 230 on dry land. Let's go for it. And then after 4 straight years of wind, hail, drought, and my APH is sitting there at 182, 185. It's like, why am I putting so much nitrogen down? The Mother Nature has such a huge impact, and I was just burning myself. And if you scale that back and just allow the crop to take care of itself, it's turned more profitable for me.
When we talk management, let's introduce crop insurance to the conversation. Did you see people this last year, instead of doing a 70%, go 90% for crop insurance just for this year? And do you have forward predictions for next year?
I am scared to get in that crop insurance conversation. I think a lot of people, it definitely varies by location. So what we have dealt with in central Nebraska is you have to take out hail. We get hammered with hail, it seems like every other year. And so everyone in this particular area has kept their multi-peril fairly low.
Okay.
But we're losing options on the hail side. So you used to go and get the 120 hail plus a wind endorsement on top of that. the losses have been so massive from the insurance company and the farmers receiving such huge payouts that has been backed off to 115. In a lot of instances, you can't even get the 120 anymore. That could be backed up further. So we're in a little bit of a different situation where multi-peril is less important. You have to go after the wind and hail is a little bit more important. But it'll be interesting to see ECO, SCO, if those are options that producers look for, because I believe the big, beautiful bill increased the subsidies on that ECO option.
Yeah, it's probably going to be another year where we have to do a crop insurance update episode. Things feel like they've been changing. Feels like there's a lot of private products that continue to enter the market that make that super confusing, especially when they all use acronyms. It's like, can we just call it a name?
So if we're looking for ways to be more profitable next year, let's take a positive spin on this. I get calls from institutional investors, people that want to pull out a stock market and maybe put into farmland. Rather than having a negative and putting a tweet out there on X that says stupid investors, blah, 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 how do we leverage them? You deal with that at all? Do you have any big money that wants to come in? And when they do, how do we as a farmer use that to our advantage?
Farmers need to be prepared to grow. If they're in a financial position to grow and want to grow, because not everyone needs to grow or wants to grow, but if you want to grow and are looking to expand and treat it more like a business and run it more as a manager, then those connections are extremely important, because we do have plenty of producers who have been farming for 40 years and will be looking to retire and give up their 800 acres owned or
not
whatever
even institutional investors, maybe just the neighbor who's a bachelor who's got,
Well, and what I see more than anything in my particular area, it's someone who grew up in the area, who moved to the south and had a $30 million business and decided to sell out, and they just want to buy ground back home. And so they're buying chunks there and renting it back to the local individuals. So we've seen a lot of people who grew up locally, have made it big and built their business, and they're wanting to reinvest in the area.
So how are those young guys connecting? Through the banker? I mean, are you saying, oh, I know Bill's got this, and are you putting them together? Are they going to coffee, church? Like, what are you seeing?
You've got to talk to everyone. If you're looking to grow, if you want to add acres, you've got to get it out there.
Okay.
You've got to get it out there. And so it's not even just the banker, it's your seed guy, it's the realtors are extremely important in that avenue. But just get the word out there to as many people as possible so that opportunity can find you.
Now, we've had a conversation with a couple of folks that are going to be presented with opportunities to pick up acres over the next 12 to 24 months. How do we determine when the right time is to grow?
That's a great question. Great question. And you have to look.
If you have waited your entire career and now you can pick up 300 acres, or now you get offered 1,200 acres, or you get offered to, go in on partnership on 300 head of cows. You don't get those opportunities very often.
Okay, so what's your liquidity? We have to have that cash first and foremost. We have to have the cash to grow. If we've been bleeding liquidity and we're down to a break-even working capital, then that's going to be tough to grow. So that's why it's so important to preserve that working capital. When you build it up, don't throw it out the window right away. You got to hang on to it because you have to have that cash position in order to grow. And then the other two big things which are really important for growth comes down to your equipment lineup. Is can you take on the acres with the equipment that you have? Because it'd be really nice to add acres and spread the cost out without having to go and buy a bigger tractor, bigger combine, whatever it may be. So can you grow in with what the equipment that you have? And then finally, labor is just so huge and such a massive problem. Is do you have the labor force to take on those acres? Because while we like to work hard, we don't want to have to work 12 hours a day the entire year. Right. We're going to need some help here. But can you make it work with the labor that you have, and do you have a reliable, good labor source behind you?
What's the metric or barometer that you use that you're just looking at all your customers and go, this farm could grow. This farm is in a great position right now. I mean, obviously cash, all that, but it's like, what is it, a debt to asset? What is that metric?
I would say from a cash flow standpoint, if they've just held it together, because the last 2 years have been really hard, but if they have held it together, and let's say that cash position, that working capital position is at, and I'm just going to throw a random number out, maybe $400 an acre still. So they might have been at $700 an acre 2 years ago. They lost a little bit, but they've minimized those losses, and they still have the cash to grow into more acres. That's probably what we're looking for. But that $400 per acre. So it depends on the profitability of the ground and the fertility, and there's so many factors. I mean, you have some areas where that's not even close to enough, and other areas where that's a lot. So it really depends on the profitability of the area that you're in.
Does anybody? We have a lot of family operations. Does anybody split from the family? Do you see that? Let's take Corey. Not that he's going to, but brother, father, he's got some of his own. Does he ever say, "I think I'm better on my own," and just go all ahead full on his own? I'm assuming that most families share equipment, stuff like that. Do you ever see splits?
No, not so much. And you nailed it. It's the labor and the equipment sharing. It's so hard. You want to spread those out. If anything, we should be looking at going in and sharing more stuff with neighbors or non-family members to spread those costs out. So we should actually be going in the opposite direction. We should be trying to bring other active operators in and finding ways to utilize our resources more effectively.
We've had a couple of listeners that have reached out to us and said kind of the same thing. When they got offered a chunk, they were able to find either that person that was retiring or giving the offer a way to transition into that. You know, is it a cost share program? Is it purely a flex lease or whatever it looks like? The ability to rent equipment that was already farming that to expand.
Mm-hmm.
But twice I've now heard to where they've brought in a neighbor or a classmate that they grew up with as an opportunity to do it together.
Yeah.
So Tanner, you normally recap. I'm trying to find differences in my mind between a year ago when we interviewed you and now. What's different now? Do you think we're doom and gloom, Tanner, and we're just hearing social media, or what's different? What's your opinion on this? What's your recap?
Yeah, my opinion is it's never not important to understand your finances. And it's never not going to be scary for a lot of our listeners to sit down and try to understand what their finances are. And that's why these advisory teams, these peer groups, your trusted lending source, your CPAs are extremely important to be able to take the time with them to sit down and understand. Because when you don't understand, I've got it on the notes here, it's a gut feeling. And gut feeling mistakes can be bad.
Yeah.
They can be big, and you may not realize how big of a mistake it was until it really hurts. So I would say difference from last year to this year, the reason we wanted to talk to Grant is his cash flow plus opportunity is huge.
Okay.
That is and not only is the cash flow plus opportunity huge, but we have interviewed Shafel. We've interviewed Clint. The team that he's assembled to be the experts
are all the right players.
Are all the people that we value at Farm4Profit and at least value their opinions. So if you get that tool all in one spot that's put together by people that are trusted, it's a fantastic opportunity to be able to do this. But my summary is there's three things that I put on this is creativity is going to drive success. If you can put yourself in a position where you feel like you are years ahead, like some of these young producers that used your tool last year, that creative thinking is going to allow you to be prepared to take advantage of opportunities when they're presented to you. Forward contracting, we've got another episode this fall. Almost this entire fall is focused on financials. The financial side, the business side of farming, to where there are marketing tools in place, but gosh, it almost feels like right now at Husker Harvest Days, the store and ignore people are going to be penalized. And at the same time as I say that, I feel like the store and ignore people have a really good opportunity coming up.
We just talked about in the futures, right? Like there's carry in the market.
Yep.
Bins are going to pay.
And then the third one is that identification of pursuit of high yield. We at Farm4Profit are preaching pursuit of profitability.
Profit per acre.
Profit per acre.
Profit per, I saw a metric this morning, I think on Twitter, bushels per dollar spent or something like that. Like there's a lot of ways to look at, things.
It'd be so cool if the NCGA had that profit per acre award instead of the high yield competition.
Yep. I've got one before you go into the end here. So throw out whether it's a good time or a bad time. You work with a lot of farmers in your role as a banker and just in your general life. What is the best investment year in, year out on the farm? Let's throw land out. We know land's good, but like, what do guys? Is it the grain bin? Is it tile? Or obviously it's different everywhere, but like your top tier.
Is it a Sukup grain bin, Maya corn head, TerraClear rock picking services, a John Deere 8R, 8 series.
Can you pick between those? I mean, can you pick a favorite?
That whole combo.
No, what actually I was just thinking about this morning. It's crazy because the producers that are best off financially are the smartest. They know the most about agriculture. They actually call me for advice the most. They know way more than I do. I should be calling them for advice all the time, but they are constantly learning, and they are humble enough to know that they need, my insight is important to them. I'm keeping an eye on interest rates and the lending options on a daily basis, and so they make sure to call me on a monthly basis and just check where things are. They don't need my lending. They really don't need my advice, but they are willing to
It's a reassurance call.
Yeah, and they are humble enough to call all of the experts that they have in their back pocket and just constantly be knowing what's going on. And because of that, they go and buy land that's for sale an hour after it's posted because they know exactly where they're positioned at all points in time. So it's just that knowledge. I mean, I think that's the greatest advantage you can have is just having that knowledge and knowing exactly where you are at all points.
Not the answer they were looking for, but what a great answer to sit back and realize that maybe, as we've said before, time is your biggest asset. And if you can spend that time planning, understanding, knowing the ins and outs of your farm business is the most valuable asset that you can have.
Mm-hmm.
I heard listening to Farm4Profit.
I heard land. That's all I heard.
Well, isn't that where the experts are?
Yeah,
So you should be listening to them.
That's right. Okay, well, you teased it early on, and I appreciate you doing that. This is super special. I'm glad that you've provided this opportunity for our audience. Tell us a little bit about what you're willing to do.
So listeners to this episode here have the opportunity to apply or to enter in for a free giveaway. So I'm going to give away one masterclass of the Cash Flow Plus to a listener of this podcast for free. So I have that as a $8,000 value, giving it away to a producer for free. And like I said, we have Shay, we have spreadsheets, we have Angie, we have Clint, looking at all of these items and giving you the opportunity to improve your cash flow for next year. So I used this myself. I got a 5x return on my investment last year, my own investment on this. So I truly believe in the product that's in here. I've used it myself. It can be yours. You just have to go to www.farm640.com/giveaway, and Rachel will get that in there, but that's 640, so farm640.com/giveaway. Enter in your name, email address, and then what you are doing to improve the cash flow on your operation. And the best answer wins. So you get a free copy, free version of that Cash Flow Plus product to help your operation going forward.
We don't get to do this very often, boys. $8,000 value.
It's huge.
It is.
Huge.
And 5X on that.
Yeah, that's right. That's just the beginning of it. That's the
5
investment
times
in
8,
yourself.
Corey?
40.
Good job.
I think we need to make them do something more. I mean, just given like what you're doing to be profitable, like send us a hat. If you send us a hat, then we'll be inundated with hats.
We don't want it to be difficult.
We don't need more.
They deserve the opportunity to get a hold of a tool that is extremely valuable. And I like that you kept it simple for them.
Can me and Corey answer?
Be able to put it, yes.
Absolutely.
I mean,
You
we put
can.
it-
I doubt your answer is going to be any good. But
Oh, mine's going to be great.
Land.
AI.
Oh.
He's going to have ChatGPT. Yeah, you need to put the answers into ChatGPT and say, hey, did you write
Was this? No.
Was this written by you?
I'm pretty sure we can cross-check that, guys. I
All
would
right.
not advise
fair enough.
going that route.
I think that's fun. Farm640.com. Hit up the giveaway. It's always a pleasure to check in with you, Grant. I appreciate you balancing out our energy. It's not all doom and gloom. And if you feel like it is, there's a lot of things you can do to get yourself out of that headspace.
Yeah, absolutely. Absolutely. I am bullish ag.
You guys got anything left for him, or should we close the show
I
out?
think that's great.
All right, listeners, we appreciate you. If you've got questions, either way, send us an email. We'll have Grant's contact information in there. You can always hit him up. But until next time, have a good one.
Farm for Profit podcast. Take a listen, have a blast. Farm for Profit podcast.